All right, gang. Good morning. Welcome back to the live trading room. How is everyone doing today? Quick screen check, quick mic check to make sure everything is well. Yes and yes. Good. Perfect. Let's jump right into things today. And let's take a look at what's on the radar. There's a lot out there. As you know, markets have been in a lot of consolidation. We've had a massive amount of patterns on the radar for the last going on 3 weeks now. We got a few of them completed, a few of them playing out, a few of them close. A lot of those are on the watch list from the weekend trading edge. You got some structure-based trades and continuation trades setting up as well. So a lot of things that we've been watching for a while now are starting to play out, and that just puts more power into what we talk about on a regular basis, where it's like, hey, the job is to make the prediction, right? You don't necessarily have to be trading all the time, but if you're consistently doing analysis and you're consistently making predictions, you're going to be ahead of the curve because you're going to have kind of a heads up on what you expect to happen or what could happen in the market. And that way, when it does, you're not caught off guard. You're not caught by surprise. You don't go into that distress mode, right? You'll still be in your normal mode of stress, but not de-stress, right? Do you guys know the difference between the two? I've done that rant a few times in the past. Do you guys know the difference between stress and de-stress? It was one of the greatest lessons I've heard from Dr. Brett Steenbarger, where I think it's important to understand that as traders and many other aspects of our life, we're probably always going to be in a constant kind of period of stress, and stress isn't necessarily a bad thing, but de-stress is the panic, and that's what we don't want to be. When we panic, we make poor choices. Usually they're emotional based choices, survival based choices, in trading that gets us in all types of trouble. So we're going to look at a structure-based trade today because I'm tired of patterns, at least for the trade of the day today. But first, I want to check out the economic calendar. Yesterday was a U.S. holiday. So we may see a little bit of a flood on the open after a long weekend, especially after ending with a pretty positive week last week. There's no real heavy economic events on the calendar this morning, but you can see a lot of European events came out, poor numbers this morning. We have a lot of minor, mid kind of level inflation type numbers coming out for the dollar as well, which may have a bigger effect on the market than kind of what you think. Again, you look at this calendar, you see all yellows and some oranges, and you're like, nothing major. But remember, the fact is, when it comes to fundamental analysis, the market is always looking for the thing that is going to affect the thing. So the big thing right now is inflation. The big thing right now is a rate hiking cycle. How many times are we going to do this 50-point rate hike? We're probably set to do it already in June and July. Will it continue? They say they're going to do it until inflation gets under control. Well, these numbers coming out, consumer confidence being one of them, are going to give us clues on how close we are to achieving that goal. And the closer we get to achieving that goal, that's when you may see things start to change. And when things start to change, that's going to affect interest rates. And interest rates are the main cog in this whole thing. So low key, potential busy economic day today, especially coming off a holiday. Or as it says, deja vu. I was just listening to your podcast yesterday where you were talking about it. Look at that. The podcast. Someone asked me the other day a question about a podcast, like, hey, Keel, in episode 403, do you remember when you said this? What did that mean? I'm like, what? I don't remember what I said at the 6-minute point of episode 403. That was 250 episodes ago. I don't know what I said last episode, but it's cool to see people are watching and listening. All right, so for today's trade of the day, and by the way, welcome. A bit rude to you guys on YouTube and TradingView. Thank you guys for joining. If you are brand new, this is, we call this our trade of the day. What we do is we let you inside the Tier 1 Trading live trading room, get a chance to see how we do. We typically look at one trading opportunity a day. It's not always my top trading opportunity of the day, but one that I think will be useful and educational and purposeful. You can ask questions and whatnot, and then I kick you out and continue on with the normal live room session. But you can always come back the next day, same time, same place, and join us. But don't be shy about asking questions and whatnot. I want to go to, what was it? I keep forgetting it. Is it Aussie New Zealand? I got stuck in all these indices and whatnot this morning. Aussie New Zealand got an old school structure-based trade, right? Old school structure-based trade for you. This was one that was on the radar as well. And again, we're going to start on the daily here and work our way down, right? So you can see daily price action is coming to a previous rejection zone. You guys see that long wick to the upside on that red candle? Give me a yes while I mute the cell phone. Too popular. Just too popular. Yep. So that's going to be our potential rejection zone. We can see an inside wick very similar as well. So what we want to do here, we want to dial down to our lower time frame. We can actually kind of minimize that zone even further. We have our big zone here from the daily. We can look at this level right here as being our smaller zone, which offers a nice level of resistance. And what I'm looking for here is, right, this is going to be our decision point. And what I mean by decision point is that one or two things are going to happen. Thank you, Mario. If we violate that level, I would expect price to continue higher. I don't really have a target for where we would go if we continued higher because of the stair-stepping levels of structure. But just by our basic rules and principles, if we violate breaking close above, I would expect to move higher. If we can hold, right, I would expect a move lower. Now, the question I ask you guys is, because I like when you guys participate, if we were to continue lower, where would you expect price to come to? Shoot me in some numbers. Shoot me in some numbers. I'll go back to the 4 hours. A few things we can do here. George says 109.86. I'll draw some lines out. My favorite part of the day. I sound like an auctioneer. 109.86. I got another 109.80 area. So I'll just draw it right here. I think all you guys are looking in the same area. Ali says 109.80. Orsi says 109.80. So all of you guys are looking at pretty much this previous level right in there. Yep. I think it's a good level. Now, here's what we talked about yesterday, right? In yesterday's Q&A, we talked a little bit about maximum favorable excursion, maximum adverse excursion, and different ways to test that when you're developing a strategy. If you guys are new, basically those are fancy words. That basically mean when we're doing our testing, we want to test how much we can get out of each move before we get too greedy and it ends up biting us in the butt. We also want to see, technically maximum adverse excursion is how far price goes against us before reversing. But in our case of testing, it's basically how small of a stop loss I can use before it's too small and I get like skunked out of positions that end up winning. And one of the things we talked about is it's different whether you're trading a mechanical strategy or a kind of a discretionary like price action strategy. And mechanical strategies, it's a little bit easier because you can do it by set things like an ATR multiplier, a Fibonacci, an indicator level, something like that. Price action trading, a lot of our target profits are based off of our analysis. And one of the things we talked about is choosing, hey, which level of structure do I go for, right? We have this move here where it's a new structure high, outside return, then a new structure high right here. Do we shoot for the first sign of danger? Do we shoot for the second sign of danger? And a lot of that is going to be based on your personality as a trader, but that's something that you also should be testing as well. Now, one thing you may want to consider here too is we don't have a 2618 here on the daily. I'm going to delete this stuff, right? We don't technically have a 2618 right here because we don't have a double top, but are you looking at this as a rotation, right? Are you looking at this as a move that came here, came down, and maybe projecting a longer move downward? Is anyone looking at this situation as that? Apologies, neighbor's dog's outside. While you guys are typing, I'll go close that. It's been super hot lately, so I like getting the cool air in the morning when I can. But now we got Barkosaurus Rex out there. So George says yes. Now, I'm gonna say I'll tell you why I am not, and I should probably look at the bigger picture of this first. I'm not really familiar. I don't really trade Aussie New Zealand, so I don't really know what's going on. But I don't think we were at. Yeah. So I would not, right? And the reason being is because it's old yes. I would not. The reason being is, do we have any reason to? Well, let's put this: do we actually have a rotation and trend? Think about our rules for identifying a trend. We don't, right? Now, this is not a double top, so it's not a 2618. We don't violate a previous outside return, right? Although we can look at this as a pullback, right? This is technically not an outside return right here. So it's not a level of relevance when it comes to determining our trend. This could be nothing more than a complex pullback, right? For you Elliott waivers out there, right? This could be nothing more than your AB equals CD at the end of your third wave. So I don't think there's any reason to be more greedy here, especially coming from a counter trend perspective. Obviously, you can do whatever you want as a trader, but I don't see any reason to think that we're going to continue lower. So like you guys, I would be looking for kind of the short and sweet move. So now's the easy part, right? That's all the analysis part. We didn't talk about IPDE, but that's what we're doing here. Identify, predict, decide, execute. Essentially, that is the process, guys, that we're going through to determine, one, what is my directional bias, right? What direction am I looking to get involved in the trade, which is, sort of important. Two, is this a trading opportunity that actually has potential, right? We do that by measuring out our stops and measuring out our targets to see if that, is there enough room for me to actually make profit? Because a lot of trading opportunities will look good, but they won't actually have room to make profit. So this is where we want to measure the rest of those things out. And you may be doing this on the 4 hour, you may be doing this on the hourly. We'll do it on both just to kind of give you an idea. Let's say you're someone that's using an ATR stop. Our ATR right now is 21. So this candle hasn't closed yet, obviously, but if we're doing a 1 ATR stop above the highs, we're going to be at 110.51s, right? That's going to give us a stop loss right up here, which is going to be a pretty significant stop loss, right? So if you're someone that has a 1-to-1 risk reward requirement, I say that 10 times straight, risk reward requirement, you know that your entry has to be above this 50% level. Probably going to be hard unless you have an aggressive entry that says I enter on like a straight pin bar. But if you require anything else, like or I shouldn't say anything else, but if you require like a lower low, lower close, going to be difficult to get an entry in that level because obviously you wouldn't close below the previous candle. Now, a double top may fit your fancy, but that's a different story. Now, if you're someone that can go down to the lower time frame, right? Now you have a little bit of a different situation. Now, the key is, do we hold above this level of structure? And it may not matter with this current candle, but let's see. This is our structure highs. We don't want to see a violation above that. Let's see. And it may not matter because we may have a false breakout candle anyway, but highs of this candle are 110.28. Close of this candle is 110.28. Yeah, so we close right at the highs. Now, another very important lesson, right? This is where you need to have a consistent rule on, do you take those funny micro pips into account? Because if you do take them into account, you're going to need to make sure that you measure it out to the micro pip, right? The fifth decimal. Again, I don't care whether you take them into account or not. I don't care if you use them. I don't care if you ignore them. That is up to you. One is not better than the other. But the key is you need to be consistent with it. Consistency, consistency, consistency. So if you don't use them, we got one thing happening here. So we got Potential 3-bar reversal in about 15 minutes, right? A lower low, lower close candle right here. That could be an entry reason. You can also look for maybe a retest and you get a double top. If you're looking to add some things, you do have the RSI overbought. We don't have any diversions leading up to that level yet. We have higher highs on the RSI as well. So you can't give yourself a point for that. But if you're adding up a CTS score, right, you've got structure, you've got RSI overbought, you've got the beginning of what could be an okay CTS based score. So really basic structure based trade here. I got yelled at on Thursday for being overcomplicated by looking at advanced pattern formations. This should be straightforward and simple. This is a structure based trade. Price comes to a previous level of structure resistance. We are looking for a hold. We are looking for price action to give us a signal that we are likely to hold and put in a little period of relief. And we are looking to pounce on that signal. Any questions about Aussie, New Zealand? Mainly YouTube and TradingView, because live rumors, we can always come back to this later if you want. But any questions? If so, let me know. If not, I'll let you go. OG sent me the new cryptographer code today. I'm excited to unwrap it. I was telling him earlier on the chat, I said that's probably the software that I use the most here. I have my VS1s up all the time, so I don't really count it as using them. They just kind of pop up, but a little crypto update would be good. All right, YouTubers, trading viewers, thank you for joining. I'll see you guys tomorrow. Hit that like button on your way out. If you're not subscribed, do it already. Lots of content on the site every week that you don't want to miss. Live rumors, let me know if there's a particular place you want to go next. If not, I will choose one from my list. But I always want to give you guys the opportunity first, just in case you're in here for a limited time. And ooh, got the spammers coming on.